Boom. We're back, baby. The ultimate market professionals never missed a fucking day. Never will miss a day. No vacations, no trips, no, I don't want to show up today because the market's not doing what I don't want it to do. No. We're here, baby. We're ready to rock. Oh shit. There we go. Gentlemen, we already got double-digit live viewers. The people are ready for the juice, the alpha. I was just preparing a fantastic stream for everybody. I have a couple of new points of confluence I want to talk about with you that I was actually discussing with Logan, which, by the way, for those of you that are waiting for Logan to join the stream, I have news. Logan's actually helping AOC right now prepare for some litigation. You know, Tom Homan and a couple other people were coming after AOC for telling illegal aliens how to avoid ICE. So Logan's just helping her out right now. He's really passionate about that effort, and he just wants to make sure that she's okay. So Logan will not be on the stream today. But the good news is I'm going to hold it down. I got some new alpha for you guys, some fucking fire. So we're going to touch upon the Treasury General account, which I don't see many people at all talking about this. So this is a piece of alpha. I'm going to give you the Treasury General account. We're going to talk about what's going on with that right now with the U.S. government. We're going to talk about GLI, the Global Liquidity Index, and what's going on with that right now, and then how I'm seeing that play out and how it's going to affect the markets here in the next coming weeks, because we're very close. The bottom is very near, if not already in. So we just got to make sure that we're timing the market correctly so that when we do get that move back to the upside, we're maximizing the gains that we can have for ourselves, and we know when we want to exit the markets. So I'm seeing a lot of points of confluence right now that I'm going to go over with you that are very, very, very solid and something that we want to pay attention to. All right, so I'm going to get right into the charts. We got no time to waste. Let's go. Let's take a look at a couple of things. The first thing I'm going to show is this tweet that does a great explanation of the TGA, the Treasury General account, and what's going on with that right now. Because the Fed's getting ready to spend some money, ladies and gentlemen. And that's what we want. We want them to inject liquidity into the markets. If they inject their liquidity into the markets, all of our bags pump, right? So let me do a little Mr. Producer. We got all them hoes. All right, let's see. Mr. Producer. There we go. Okay, beautiful. So here's a tweet. I just looked something up just to give a good general explanation. So Ash had put out this tweet. So the U.S. government right now, they've hit their peak or their cap on the debt ceiling. So whenever they hit the cap on their debt ceiling, they can't borrow more money to be able to spend money. So what do they have to do? So let's read the tweet. So the U.S. Treasury is about to inject $560 billion into the economy. Now, this is correct what he's saying here. This is not QE, okay? So right now, the government's still in QT, which is quantitative tightening, which is bad for markets. It means they're taking liquidity out of the markets, okay? So this is not QE, okay? This is using the TGA, so the Treasury General account. So the TGA is similar to a checking account, but for the U.S. government. Right now, the U.S. government debt is over $36.6 trillion, big issue, way above its $36 trillion debt ceiling. So this means that the government can't borrow any more money, but if they won't borrow, how's the government going to spend? Because they still have expenses, they still have the military, they got to pay the interest on the debt, they got to pay, we don't have to get into all of it. They got to spend money. So if they can't borrow more money, how are they going to spend money? Well, that's where they're going to use the TGA, all right? So as of right now, there's nearly $560 billion sitting in the Treasury General account, which is going to be injected to stimulate the economy. Now, as this amount will enter into circulation, stocks and crypto, they're going to move up. It's more liquidity for the markets. So, and then he's saying his whatever, but let's take a look. So that's what they're about to start doing with the TGA. They're going to start unloading this money out of their checking account. And they're going to have to start unloading that into the markets. Beautiful. Okay. So what does that look like for us? So let me pull up a chart for you guys. I prepared a nice little chart here. Okay. You guys aren't seeing this anywhere else other than the fucking ultimate market professionals. All right. So I'll do a little Mr. Producer. Oh, shit. That's hilarious. You guys can't see my screen. Say something, motherfuckers. Here we go. So I got a chart on TradingView that I've got pulled up. Titled it here. This is the Treasury General account. Okay, this is the TGA, and this is what it looks like. So the Treasury General account, I want to see what kind of signal is in this chart. Does this actually show us when things might start pumping? Is there a correlation between the emptying of this account and alt season and crypto? Do things start to pump? Well, you may not be surprised to hear there is confluence. Okay, so let me show you something very interesting here. So this is locally where we're at on Bitcoin. We can talk about that later in the stream if you guys want to take a look at it. We popped back down out of the range. There you go. So let me show, let's do it like this actually. And let's add Bitcoin down below. Okay. Now we can do line. And then let's put this in log. Okay. So what kind of confluence is there between altcoins? Let's do it with altcoins. Let's change this to others. Hold on, whoops. Let's put others down below so we can take a look at what altcoins do. Excluding top 10. Okay, here we go. Check this shit out. Look at this fucking signal right here. Okay. So what happens to the market cap of others as this Treasury General account starts to get emptied, meaning that they're putting liquidity into the markets? Well, we saw it spike here in March of 2020. What was March 2020? COVID. Okay, so you get COVID. So you get this big increase in the size of the Treasury account. You get a fucking 5x on their balance, which was $1.4 trillion difference. So that was 1.81 trillion. Let's mark that out. Okay. So the Treasury account gets up to, oops, let me delete this one. Does a 5x, gets up to about 1.82 trillion dollars. Okay. So we get this peak in July of 2020. Then slowly you see it start to nuke. Okay, interesting. So what happens whenever this general account starts to nuke and they start to deplete their money and put it into markets to stimulate the economy? So the Fed starts spending this money, you get a big nuke, and then what do you see happen on this nuke? Look at this. Huge pump on altcoins. That was alt season last cycle. That was 2021 bull run. Okay, interesting. So that does match up. What does that mean? Well, let's take a look at some timestamps. So at its lowest point, it was October of 21. This second drop was right here in December of 21. Interesting. December of 2021 was the peak of others market cap, which is altcoins. That was the peak, the last part of our alt season, last bull run, last cycle in crypto. So clearly there's some type of signal there. Whenever the Fed depleted their RGA, or the TGA, the Treasury General account, that money clearly entered in financial markets after stimulating the economy and pumped altcoins. That's when you got your alt season. As this was coming down, right? As this Treasury account was getting depleted and we had this first, drop down. This was April. This was June. I mean, this is confluent with our tops and altcoins, right? You see, as this is nuking, altcoins are ripping, right? It's very obvious. So now, if we take a look at where we're at here, locally, okay, so clearly alt season happened whenever this account was getting drained. So where are we at locally? So we have less in the account than what we had in COVID. But right now we're at $681 billion in this TGA. So what do we think is going to happen as the Fed is now finally forced to start depleting this account. Okay, hold on a second. So let's say we get this nuke back down over here. And they start to deplete this. Well, I'm going to expect altcoins do something like this. Curl back up and go to new all-time highs. And so we look at this and we say, is there signal in this? Is there alpha in this? Yeah, because if this money is leaving these accounts and they're injecting this liquidity into markets, markets are going to benefit from this. This is more money in the markets, appreciation of assets, et cetera, et cetera. It clearly happened during COVID last time. So that's inherently bullish. Even though we're not done with QT necessarily, this is essentially a form of injecting liquidity into the markets to stimulate the economy. So that's huge because that's also lining up with what other indicator we've been paying attention to. The GLI, the Global Liquidity Index. Okay? So the Global Liquidity Index, just as a refresher for anybody that's new, is how much liquidity is getting put into the markets, an index of all the largest world banks, all the largest world reserves. So the U.S. Reserve, the U.S. Federal Reserve, the Japanese bank, the European bank. As those banks reduce interest rates and inject more liquidity into markets, the GLI is going to continue to go up. So let's see if I have it on here. Okay. So look what's happening to GLI. Let's actually look at it on Bitcoin. Okay. Let me hide these drawings real quick. Okay. So GLI is also doing what we want it to do. Okay. We've been paying attention to this recently. So here's Bitcoin down below. Okay. And then here's the Global Liquidity Index. Since we've been tracking it, we've had meat sticks. Okay. Global liquidity is going up right now. This was the previous all-time high on global liquidity. If we can get the GLI to break out to new all-time highs again, in confluence with the Treasury General account getting depleted, with lower interest rates, with QT ending later this year, possibly QE, everything is setting up for an incredibly bullish rest of 2025. Okay, so I really need you to understand the market conditions that we're heading for. Okay, everything looks bad right now. Everybody thinks the shit's over, cycle's done, there's not going to be an alt season, etc. Incorrect. All the catalysts are lining up for an incredibly bullish 2025 and a massive alt season, the alt season that we've actually been waiting for. Because you get GLI to go to new all-time highs, okay? Look what happened the last push up on the GLI on this index. Okay, look what happened last time. Let me do it like this, okay? So the last time global liquidity had a blow off top, okay, was here. You get this blow off top right here. So this was the most liquidity that was ever injected into the markets by these world banks. Okay, the Fed, Bank of Japan, European Bank. Okay, whereas right here. What happened right after this GLI started pumping? Bitcoin rips. Altcoins rip. Markets rip hard. Makes sense. More liquidity, higher prices. Okay. Interesting. Now, we had determined on those moves from this top to this top, there's about a 80-day lag before GLI tops out and Bitcoin tops out. About 80 days it takes. Okay. Then what happened with GLI? Okay, then the GLI bottoms out. So it nukes back down. We bottom out over here, okay? So what happens to Bitcoin and altcoins? right? This starts to nuke, Bitcoin starts to curl back down, follow it because it's delayed. Altcoins do the same thing. Altcoins get decimated, right? So there's a lag. So let's call it this bottom to here. Well, let's say if this is the bottom, maybe 96 days, maybe 3 months, we can call it. Okay. Depending what you want to call the bottom, you could try to say this, maybe. Let's see. About 50 days, 2 months. We'll call it 2 months. We'll call this the bottom. Okay. Because that's more, makes a little bit more sense. So let's just say that potentially this is the bottom on Bitcoin, this little move right here, the 78.3. Okay, so Bitcoin was basically catching up to the GLI as it had done to the upside. It does the same thing to the downside. Makes sense. Less liquidity, markets come back down. So now we're getting this push back up on the GLI. Look at this. So we're pumping back up. And we're getting a bunch of green candles here too. So this looks like it's pumping up hard. Okay. This breaks previous all-time highs on the GLI, which we're very close right now. We're very, very, very close. I mean, look, look at that. Tiny. We're so close. We break all-time highs again. Bitcoin, altcoins, crypto, equity markets, they're all going to start catching back up to that again too. That's the correlation between the two. So we've been seeing this continue to move up, and I'm saying, okay, well then the bottom's got to be close for these markets. It has to be close because you can't continue to inject liquidity into world markets and that liquidity not find its way into equities, crypto, Bitcoin, etc. It's going to happen. It's going to find its way into these markets. So you have the GLI is pumping. You have the Treasury General account should start getting depleted, which last time we had a huge depletion of this account, alt season, biggest alt season we've ever seen, right? 2021. These things are starting to line up with each other. Okay. So now we're starting to find some points of confluence. Things are starting to make sense. Okay. So you can't necessarily use the TGA or the GLI to be able to call tops and bottoms within the day, within the hour, maybe even within the week. But clearly there's a large correlation on higher time frames where you can have a sense of, okay, market should be heading here relatively soon. So us, people who are trying to make as much money as humanly possible in these markets can say, now I'm confident to start accumulating some of these winners, some of these runners, whether it's top, blue chip meme coins, whether it's top blue chip crypto assets like XRP, Ethereum, Bitcoin, Solana, Doge, whatever you want to buy. Now you can start accumulating some of these assets with confidence, knowing that the bottom is either in or very close. Okay. Even if we have to stomach a little bit more downside, you hedge by not buying everything at once. You DCA in. Once you start to get that move back to the upside, you got your positions ready. Okay. So in my mind, I'm saying, okay, markets are going to go up at some point within the next month or two. That's what I'm seeing because these things are starting to line up together. So you got GLI moving up. We got the TGA, Treasury General account, right? Now let's see how these things are moving in comparison with Ethereum. Okay, so we'll go back over here. Let's remove 3 drawings. Okay, let's look at ETH and why I think the bottom is close. Okay, get out of here. Why the bumbleclut is this? How they change my shit to rough? Okay. What are we seeing on ETH? I hide my drawings. I got all this bullshit on here. We can leave the price labels. Okay. So what am I seeing on ETH? Here's why I think that the bottom is near. So I had done this analysis on Ethereum, trying to figure out when are we going to bottom out after this huge liquidation event that we had on February 2nd, okay? Because we're trying to time this ETH trade fantastically once ETH BTC starts pumping back to the upside. So the last time we had a big capitulation on ETH was on August 5th when we had that nuke from Bank of Japan, right? Japan liquidating themselves. So if we take a look at a couple of indicators here, let's do the RSI, right? You had this capitulation on ETH. Clear, very oversold territory. So you get this capitulation on ETH. You see this RSI bottom out, right? And so I said, all right, well, how much time went by between this capitulation and the fill of the wick? 32 days, and then to the high, 19. Okay, to the next high before we came back down and filled the wick. Okay, let's do the same on our current move. Look at that. 19 days to set the local high, 20 days to set the local high from this recent capitulation. Okay, now it wasn't necessarily a full capitulation, unfortunately, for us, because that's why I think it was going to come down lower at about 1750. The only issue was we didn't come down into this oversold territory this time on this liquidation down. This we did get oversold. It was a full capitulation. We didn't get a full capitulation on this side. But at least from the wick down to the local high, we had 19 days and then 20 days over here. So what logically would be the next move? Well, we had drawn this out before we even made this move down here, right? So I said, from here, from the local high, how much longer until we set the low? Took us 13 days to set the local low before we made this run back up from $22,060 all the way up to $4,100. Okay, let's draw that over here. So from the top, 14, 15 days. 13 days would be right there. 14 would be right here. Think about that. Look at this. It's playing out perfectly. Look how this is playing out. So what I'm thinking is going to happen on ETH, right, is because we had timed it out with the GLI. I'm gonna put this all back together, okay? Jeff Mitchell. There's a small group that can do math. There's an even smaller group who can explain it, but those who can do both become millionaires. Well, makes sense because I fall in that camp. So let's see here. So we had this move from the upside to the downside. Technically, we should be bottoming on ETH if we do it in the same time period as last time. We should be bottoming on ETH on March 9th, which could play out because look at something like this. Now, why would I expect a bottom at 17.5? Because we need that final capitulation on ETH. Okay, I know it doesn't sound good. I know people are scared of it. They're worried that it happens. But if we get this capitulation here on ETH, we're going to get this move right here. Or we get the RSI to come into oversold territory. You see that? Which would then be confluent with over here, right? Look at this, right? So you get this RSI to bottom here. Okay, that's this move. Come here, then it pops back up, comes all the way back down and capitulates. Here, we got that first move where we hit the bottom of the range on the RSI. We pop back up, just like over here. We pop back up. And then we want to capitulate now and come down into oversold territory, which would take us down to where? The 1750 level we've been talking about on ETH. That's why this, to me, is the bottom. We get that 1750. That's max bid, max fucking full port, everything ETH, buy boys club, etc. That's full port. It's possible that we don't actually get the 1750. It is possible. They could save it. They could keep it in this macro range from this cycle. The macro range on ETH from this cycle is from the top here, which is $4,100, right? We hit it once, twice, 3 times rejected at the top of the range. And then the bottom of the range being here, 1, 2, 3 times basically we hit the bottom of the range as well. So it is possible that we hold this 22,065 level and start ranging back up and then break out into price discovery up over 5,000 from back here. So those are the two scenarios. We either hold this $2,000 mark, or as I'm predicting, this final capitulation on ETH down to 1750 before we start pumping back up. Okay? My sound is glitching. What the fuck? Gentlemen, tell me, am I good? Corey, am I good? How's it sound? We got a ton of people watching on X. We got over 42 live viewers, so that's good. Is my sound good? Can you guys hear this? Corey, give me a thumbs up. Okay, because I'm giving fucking game right now. My sound's glitching. That's atrocious. It kept going in and out. Is it good now though? Tell me if it's good now. Okay. I'm going to assume it's fine. So, yeah, it might be you, Harry. Might be you, Harry. So, anyways, this is what I'm seeing on ETH. Okay, final capitulation or we hold here. We'll see. Very simple. One or the other. Okay, we don't have to overcomplicate it. Either way, ETH hits the bottom of this $2,000, this bottom of this range. I'm accumulating here, but not with all my money. If we get to 1750, full port. I'm in. Okay. So why is this timing matching up perfectly? Stay with me now, everybody. Stay with me. Okay, stay with me now. So we've been talking about the GLI. We've been talking about the TGA and all this liquidity about to flood into markets. Okay, good. On ETH, these capitulations are timing up almost perfectly. Here, 19 days from the wick down to the local high. 20 days from the wick down to the local high. 13 down to set the local low. We still have 1 or 2 days left to set the local low here. Beautiful. Okay. So what does that also line up with? It also lines up with our what? Our GLI. Okay. Why would this make sense? Watch this. So GLI bottomed out, let's call it January 12th. Okay. It's in about 54 days. Let's call it 60 days. 60 days would be March 12th. Look at that. March 12th. So why am I saying 60 days? Well, look at this. When did this start pumping? So this was 96 days when we start pumping on. Breakout was here. Beezy, can you hear me? The gentlemen think that the sound might be glitching. Can you hear me, Bees? Bees, give me a message in the chat. Okay, I'm gonna keep going. So 60 days, right? Let me put this on here so you can see it well. Okay. So your sound is fine. Beautiful. Okay, yeah, it is you, Corey. Let's massage this. Okay. So from the local low on Bitcoin before it started ripping, about 67 days. From here to here, about 60 days. What the days like this, right? And then from here to here, 60 days, let's call it, because it'll probably top out over here. Local low. Or local high to low, 74 days. Okay. So what's the point I'm trying to make here? Your sound is fine. Beautiful. So the GLI in Bitcoin are delayed. So Bitcoin is lagging behind GLI, okay, by about a couple of months. Okay. So if it's lagged behind by a couple of months, and then you look at something like the GLI, which is the local bottom, we're about 54 days, almost 2 months into this uptrend. That means that 2 months later, 2.5 months later, Bitcoin, Ethereum, crypto, altcoins should start pumping up later as well. So this started moving up in January, middle of January. Well, what's 2 months from the middle of January? Okay, let's go middle of January, right here. 2 months from the middle of January is obviously January 11th. 2 months would be, oh, look at that. Look at that. It lines up. It lines up when we should be bottoming out on Ethereum because these assets are lagging behind GLI. So the move that GLI took to the downside, this is what crypto has been experiencing for the last 2 months. January and February. Or December, January, and into February. Now, GLI has been moving up since January, right here, January 11th. 2 months forward, so we wouldn't see it for 2.5 months start to get affected by the crypto markets. What's going to happen? Bitcoin, Ethereum, altcoins are going to start moving up again. So what do you see start to happen? Something like this. Okay. So to me, those are multiple strong points of confluence to suggest that, number one, most importantly, the cycle is certainly not over. We're not about to go into a recession, into a bear market. It's over. It's not going to happen. Oh, everybody's afraid. No, that's not going to happen. Certainly the opposite's about to happen. Okay? Because I just gave you all those points of confluence as to why things should start heating up again very soon. If not March, certainly April. Q2 is going to get hot. Okay. So I see the bottom getting set either already on Bitcoin or very close, and therefore the same thing for Ethereum. Okay. So that's the analysis on that. Now, let me give you a little bit more macro because I know you guys are loving the macro right now, huh? Because right now we have to think macro. When the local price action is shitty, when the local price action makes you afraid, you have to look macro and decide whether or not this is actually a bear market or we're just getting a local correction. Well, guess what? Guess what just happened on DXY? Look what just happened. I had this drawn out from weeks ago. Weeks ago. Demand on the DXY daily time frame. This is where we came, blow off top. Right? So this is head and shoulders. Let me draw this better, motherfucker. Shoulder, head, shoulder. Nuke that shit. Shoulder, head, shoulder. Right? Got the bounce off of the demand. Pop back up. Whoosh. Broke right through the demand. This just happened last 1, 2, 3 days. Everything macro is gearing up insanely bullish for an alt season to come here very soon. This Dixie just broke down the US dollar. The US dollar starts breaking down, people flood into risk assets, and our risk assets become more valuable compared to the dollar because the dollar's worth less. Nuking. Look. Like I said, I had this demand zone. Look. So over here, it was demand. Over here, it was supply, overhead supply. We nuked off of it. Look, we nuked all the way down. Boom, 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 boom. So where's this coming down to? Maybe a little bounce right here. Whoosh. At the very least, down into here. Okay. At the very least. You get a move like that on Dixie, we're pumping, boys. We're fucking pumping. Look at this. I'm giving you the alpha. Dixie is breaking down. I even had it. I had this already drawn out from weeks ago. Breakdown here is bullish. 1, 2, as soon as we lost the demand, look what happened. Whoosh, whoosh. Nuking. We just lost this huge demand. Okay. So DXY is breaking down. Bullish. Give you one more point of confluence. You guys are going to like this then, huh? All right. Let's put it underneath. Let's do 10-year. Yep, right here. I still have my drawings. Where's my drawings? Where the fuck are my drawings? I had drawings for the 10-year. Let's do it like this. I don't know why it doesn't have my drawings, but fine. Fuck it. 10 years doing what as well on top of the DXY? 10-year bond yields are coming down as well. If 10-year bond yields, look, shoulder, head, shoulder, nuking. All right, a little bounce here. It's fine. Nuking. Why is that important for financial markets? If the U.S. government bonds, if the yield is going down on U.S. bonds, what's going to make countries that own these U.S. bonds want to keep the bonds? So I'll teach you how this works. So the reason the nuking of the value of the dollar is important is because everything is a pair trade. So if you own Bitcoin, you denominate Bitcoin in US dollars. So BTC divided by USD. Or ETH divided by USD. Okay? It's a pair trade. So let me put this up for you. Okay? ETH USD. So you denominated it in a US dollar. So whenever you have a fraction, you have a numerator and a denominator. The numerator is the asset on top, which is Ethereum. The denominator is the asset on the bottom, US dollars. So one Ethereum denominated in US dollars is worth how much? Right now, $2,100, right? $2,200. If the value in the denominator goes down, then the value of the fraction as a whole goes up. So if the US dollar is worth less and the bottom of the fraction, the asset is worth more, right? 10 divided by 2 is 5. 10 divided by 5 is 2. So if the denominator is a smaller number, right? 10 divided by 2, the fraction is worth more, 5. 10 divided by 5, denominator is a larger number, the fraction as a whole is worth less, 2. Okay? There you go, mathematics. Simple math. So as the value of the US dollar is going down, our fractions are getting larger. Our assets are worth more. Okay, good. 10-year government bonds. Why is this important? So if the yield on the U.S. government bonds is going down, countries that do trade with us, for example, China, great example. China makes money by selling us a shit ton of products. We import products from them, okay? So China makes all this US dollars, all this money from selling us things, and they have this huge, massive pile of US dollars. And they say, okay, US dollars are a depreciating asset. They keep printing more, so the value of these dollars are going down. How do we want to hold our surplus US dollars? Well, there's a couple ways they can hold it. They can buy US government bonds, because if they buy bonds, now their US dollars are getting interest on what they're worth. Okay? If the interest rate that the US government is willing to pay on these bonds goes down, which it is right now, then there's less of an incentive for nations or major investors to own US bonds. Why is there less of an incentive? Well, because if they can get a higher yield, a higher rate of return on something like, for example, gold, which China is doing, importing a fuck ton of gold, buying shit ton of gold to then spend their US dollars for, and obviously hold gold. Well, China is taking their US dollars instead of holding bonds and is putting this money, oh my goodness, fucking subscriber. If China is getting rid of all their US dollars because these bond yields are going down and saying, I can get a better rate of return by owning gold or by owning stocks and risk assets, what does that mean? All those US dollars are getting put into the stock market, are getting put into equity markets, into risk assets. Now you get all this new liquidity into markets that in turn do what? Raise the price of our assets. Beautiful. So this is why you want 10-year bonds, 10-year bond yields to go down, because then it incentivizes major players like nations or major investors to then rotate the liquidity out of these bonds and rotate them into stock markets, into these equity markets to then buy risk assets. They buy risk assets, prices go up, we all make money. Make sense? So everything is lining up for an incredibly bullish year. I don't think people are really using all these points of confluence to really understand what the fuck. That was just a ridiculous comment. There are so many points of confluence to show that, oh, we're going into an incredibly bullish period here very shortly. GLI is going up. The global liquidity is going up. Bullish. TGA, Treasury General Account, is about to get depleted. Bullish. Interest rates in the US are going to continue to go down. Bullish. DXY is nuking. Super bullish. The US dollar, the value of a US dollar is going down. People want to get rid of their US dollars and put them into risk assets. Okay, great. 10-year bond yields going down. Bullish. People don't want to hold government bonds anymore. Put their money into markets, into risk assets, gold, silver, major corporations like Nvidia, Apple, Google, whatever. The forest through the trees. Remember to see the forest through the trees. So all these things are telling me, oh shit. Right? Shit's about to heat the fuck up. Okay? So you could call it, whoops. Tighten this up. Say, you could even say something like this. DXY already did it, but you get this on 10-year bonds. You popped back up, right up off the demand. Whoosh. As soon as you lose this demand right here, change this. As soon as you lose this demand, you're fucking cooked. You're coming all the way down here. Okay? You're going to retest this. That's where you're coming down to. Okay? And if you lose this, bumba clap, you're coming back down into here. Something like that. Back into this region. Bullish, 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 bullish. Understand? Okay. Now, that's macro. Short-term time frame. Did we go down a lot in the last couple of months? Yeah, we did. It's a local shakeout, local pullback. Shit happens. Okay. Shit happens. But that's where I see the market at right now. All right, gentlemen, let's pop back up on the Bitcoin. I'll just give you a quick look at Bitcoin. And we will horizontal. No, nope. Liquidity, we already talked about it. Okay. Last look, and then we're going to get out of here. All right, so locally, like I said, locally, I'm still bearish, even though I just gave you guys a shit ton of confluence as to why everything's bulled to the tits. Longer time frame. But locally, I still see a little bit more downside on Bitcoin and ETH. Okay. Again, locally, since this liquidation wick, I've been bearish. I thought that we're going to at the very least get a fill of this wick. And I talked to you about 1750 on ETH. Okay. The low might already be in on Bitcoin. We might come back down here and sweep this liquidity, right? From 78,000. And if we get that move on Bitcoin, I would expect ETH to do the capitulation down to 1750. Okay. Reclaim the yearly open. We're looking good. Let's put our volume profile on here. Okay. So POC 97,000. I want to see this POC get flipped. I want to see this mid-range get flipped. We're looking fantastic. We break above 102,000, the February monthly open, which is crazy to think. Just a month ago, we were at 102,000, 102.5 thousand. We reclaim this February monthly open. See you later, ladies and gentlemen. Up to the next fib. About 125 to 130,000 is where Bitcoin goes next. Okay. So POC, flip this. Yearly open is going to be a sticky point. So we got to flip the yearly. POC / mid-range, flip that. Monthly open, we send higher. Okay. Locally, though, for the next week or two, I'm expecting something maybe like this. One last stab down lower in the next couple of days before we come back up. Same thing with ETH. Come back down, 1750. Quick recovery. Okay. All right, gentlemen. Outside of that, fantastic episode. Okay, so pay attention to the TGA. Pay attention to GLI. Pay attention to DXY and the 10 years, 10-year yield. You guys will be good. All right. Any questions, comments, concerns, gentlemen, before I get out of here? For those of you that want to learn how to do what the fuck we're doing live on stream, for those of you that want to learn how to actually make money in these markets, not get shilled bullshit by some of these fake influencers and fake scammers, these people who just try to prey on the markets, try to prey on you as exit liquidity, get you to buy into these scam meme coins, scam pumps, all this bullshit. If you actually want to make money with gentlemen, understand how these markets operate, understand how to make money on a long time frame to actually change your wealth status, to actually change your family's life, join the Taylor's Code. Inside, we have a group of competent professionals that are actually trading, investing, and making money in these markets on a long time frame, putting them in positions to actually win. Okay, not just sell you some bullshit, somebody who doesn't even know what the fuck they're talking about, just take advantage of you. No, we're here to make money as an organization, as a network. We're here to actually better ourselves and our families and do something worthwhile in these markets, as opposed to just, being taken advantage of like most people are. So, Michael Kennedy, good to see you. Thanks for subscribing. 44 live viewers as we speak. Fantastic. It's one of our bigger streams. Makes sense. People understand we got the alpha, we have the juice. So the link is in the description. The link is in my X bio, my X profile bio, thetaylorscode.com. If you want to join the network, the university for the ultimate professional, trade with us, make money with us inside of our private Discord, inside of our private group, you're actually going to see where I'm buying, selling assets, what assets we're accumulating at what times, when we're selling. Things that we don't talk about on YouTube, of course, are all going to be inside of the network for those that are investing with us. I'm not going to give you what I'm buying on YouTube. I'm not going to tell you when I'm selling. I'm not going to tell you when I'm, the cycle's over or not. I'm going to give you the macro data. I'm going to give you the TA, the analysis, to show you that I'm competent at what I do and why we make money. If you want to be a part of the true wealth generation, You got to be inside the network. Okay. So I'm actually going to share my screen. For March, because we just finally launched our private Discord, it's going to be $40 off of your first month. So it's literally $10 for your first month to at least become a part of the network and just find out what the fuck we're doing. So $10, you can't call yourself an investor if you don't think that's worthwhile to make more money this cycle. So let me pull up the website and I'm going to show you guys this. Let's do the taylorscode.com. Okay, so here's the taylorscode.com. For those of you that are not already inside, there are 3 different programs that we have. The professional, gentleman. Can you guys see this? No, you can't. Hold on. Okay. So the taylorscode.com, you got the professional, gentleman, and hero. Professional, you become a part of the private Discord. We're going to get you a link sent over. You're going to join, get your role, see what we're doing inside, be able to chat with us, talk to us, make money with us, etc. If you want to become a part of the private Discord of the network and have access to the private Crypto Plays campus within the Discord, it's the gentleman program. That way, you're going to be able to learn the TA, the analysis that I'm doing. You're going to see my positioning, my portfolio, what I'm doing, when I'm buying, when I'm selling. Obviously, get the signal before anybody else gets it. That'll be a part of the gentleman. And then if you want to join the hero package and become a part of the entire Discord, which is the private network, the private crypto plays, the fitness campus, and the e-commerce campus, it'll be the hero program. Okay? Look at that. 50 live viewers. 50 live viewers. Okay, cool. Use discount code. Here's the discount code for the first month. This is only for March. After March, it's done. After March, you're too slow. You pay full price just like everybody else. Just for March, and then this discount code expires. If you join the professional, gentleman, or hero, you're going to use discount code TC444. TC444. Okay? You come in here, add promotion code TC444. You apply, it's $10. $10 for your first month. Get inside. Start making money with us. There's nothing else to say, gentlemen. Okay? Outside of that, appreciate you. 57 live viewers. Look at that. Everybody's coming for the juice at the end. They just came here to buy. So join the private network. We'll get you out of the Discord ASAP. And we'll get you making money with the gentleman ASAP. Okay? Let's fucking win big all year. All year we're going to win big. Hey, they're not working like we are. It's just the reality of it. They're not going to work how we work, so they're not going to win as big as us. Screen capture. Let me get back to a live scene so you guys can see my beautiful face. Mr. Producer. All right, ladies and gentlemen. Appreciate y'all. I'll see you guys inside the Discord. Gentlemen, let me know if you need something. Message me in the Discord. We'll get some charts out for today. Put out some new charts. We'll take a look at some things. Like, comment, subscribe, do all that. You guys know what to do, okay? Let's get this out into the algorithm. Let's get people making money. Let's get people growing the organization as opposed to, you know, James Charles makeup tutorials, okay? Do your part to better this world. Let's get the ultimate market professionals out there, not fucking makeup tutorials, okay? Peace. Mr. Producer.